Welcome investors to Joe's Investment Express. Joe here. I'm going to tell you all about sell stops, the way I use them, the different strategies, why you should use them, when you should move them up, should you use a trailing stop, all of that jazz. And I think this will be really helpful for you, especially if you never use sell stops. Before I begin, remember this is just educational advice and entertainment. It's not financial advice. I'm not a financial advisor. I have been investing, however, since 1996. And in 1996, I didn't even know what the heck a sell stop was. And then I don't remember. Eventually, I found out about them. But there's an old adage floating around that sell stops just stop you from winning. And I kind of bought into that because, as you know, many times in the market, the price will come down, hit your stop, and then bounce right back up the next day, and away it goes without you. But let me tell you, sell stops are so important. It's like wearing your seatbelt. You don't need it till you do, right? And I use sell stops maximum of 10%, usually closer to 5%. You look at the support lines on the chart. I'll show you that in a minute. And why do we do this? Because we can take a lot of paper cuts. But as you may have known, as you may have discovered this spring, if you don't use sell stops, then at some point the market's going to roll over and you're going to ride a bunch of stocks like Peloton from 130 to 14, and that is psychologically and financially devastating. So let's use one of the best shipping stocks, SBLK, Star Bulk Carriers, as an example for how we go about setting and moving our stops around. So you should set your stop immediately after you buy a stock. Not a few hours later, not a few days later, immediately, because sometimes stocks can roll over hard intraday. How you go about it is really easy. Now I'm showing this from my E-Trade brokerage. Your brokerage will differ slightly, I'm sure. But you have these toggle switches, toggle menu items. And so you've bought the stock, here's Apple, and then you just pick sell, and then you, under price type, you pick stop on quote, and you type in your stop price. Now remember, you don't have to have all of your shares at the same stop price. You can set half at 10%, half at 5%, or a third, and a third based on support levels. You can get creative in doing that. And I'll do that sometimes. I'll set a really tight, especially if it's a big position, I will set a tight stop on a lot of it, maybe 2/3 of it, and a 10% stop on the last third. So, and do not set, in my opinion, do not set a sell stop limit. That will limit your shares from selling if it falls too far below the price, and you won't get a fill because, what's this notification? Is it a good time to buy Bitcoin? I don't know, guys. That's a different video. So let me tell you something. Mark Minervini, who sometimes trades $10 million blocks, said when you need to get out, get out. Do not risk not getting a sell fill for all of your shares. Don't mess around with sell limits, in my opinion. All right, now, so let's do this in action. Here's our chart again. Star Bulk had a volatile uptrend. Then it pulled into, this is called a head and shoulders base formation. Shoulder, head, shoulder, shoulder, complex head and shoulders, if you want to get really technical. This is no coincidence that we see buying along the 200-day exponential moving average. This is fund managers scooping up shares. They like to watch that line, and to a lesser degree the 50-day. So what we do, if you're a momentum trader like me, you buy the breakout. Now, if it's a strong bull market, then you buy it immediately after the price breaks above the pivot point. In a weak market, as was the case in February 2022, you want to wait and make sure that the majority of the breakout's going to hold up. That would have prevented you from buying this reversal candle here and it would have gotten you in right here. So let's say we bought right here about 23. Then you measure out 10%, which would be right about here, and then you see if you can bring it up a notch. So here's a natural little support shelf. So what we would do is we would put our stop right beneath this candle, this doji here, well, about 21.2 or something, which would give us about an 8 or 9% stop. Now, this is stockcharts.com. I have this measuring tool. If you don't have the measuring tool, you can get out the old calculator and you just type it into Google here. So let's say our breakout point, see, I already did this. 23.25 was our purchase price, and then you press times 0.9, and that gives you 10%. So 10% would be 20.9, and so you look on the chart, 20.9 is right about here. That's a little low, so we could bring it up to 21.2 or so. And then you just let the stop do the work. You close your eyes, well, I don't know about that. Let the stop do the work. And if it hits, it hits. You got to be really zen about this. If it gets close to your stop, don't panic and sell. Wait for it to hit your stop or not hit your stop. Now, in a strong bull market, breakouts usually work, and they often go up about 20% before pulling back or basing out again. In a weaker market, as we have right now, I like to sell half at 10%. So here's 10%, 25. I sell half, and then you can do one or two things. If you really believe in the stock fundamentally, its story, the market in general, then you can leave your stop down here at 5 to 10%, and you've already de-risked the trade by selling half up here, 10%. So if it comes down and gets hit now, then essentially you're going to break even, right? You took a loss on half, you took a profit on half. Or if you don't trust the stock as much or the market as much, when it gets to 10%, you can raise it up to your break-even point. Then you're guaranteed about a 5% gain if it comes down and hits your stop, unless there's some horrible gap down. But we can't worry about those. Well, we can, but you can't always avoid those. Now, let's say we left our stop down here at about 8%. So when do we move this thing up? You move it up after the first natural reaction. So we see this nice breakout, and then we see this doji, which is stalling action, and then we see it fall back. So when these things pull, a natural reaction is usually about 3 down days. If it's more than 3, then that starts to become a yellow/orange/red flag, depending on the breakdown. But keep in mind, stocks often pull back to their breakout point, especially in weaker markets. So here we have a 2-day natural reaction. I would rather seen it go back 3 days actually and shake out more of the weak hands. But then when it moves above this natural reaction, either on the close here at 25.5 or intraday up here at 26, then that's your signal to move your sell stop to break even. Then you got a good chance of not getting stopped out, and then you're gonna walk away a winner, right? Then you just let the stock do its thing. In this case, it went up 36%, and it's been basing out here. This has been a volatile bucking bronco of a base, but that's how the market's been, right? You get messy bases in crazy markets, and now it's broken out again. So ultimately, what you want to do, best case scenario, is you put your stop, you move it up again to slightly below the 50-day exponential moving average. Where exactly? There's no, I can't give you a specific percentage. It's an art, right? You see it's been pulling about this far below the 50-day. So maybe right now you set it at about 27.5. Then a few days later, you set it at 28, then 29. Now, some people would say, well, why not just use a trailing stop? Well, you can do that, but I like to be more precise. The only time I use a trailing stop is when a stock goes exponential. Let's look at old Tilray here. Here's the epic move in Tilray. When was this? Why doesn't it tell me when this was? Oh, 2018. So what you could do when you see a stock start to go parabolic like this, you could set an arbitrary trailing stop at say 10% or something. But I like to be more precise, and I like to sell on strength. So I probably would have sold some here. I would have probably sold half here, another half of that here, another half of that here, another half of that here, and then whatever was left here when it made this huge spinning top doji on mega volume, widest ranging candle of the day. That's a sure sign that this stock is going to roll over. When you sell on strength, once you get used to that, it feels good to lock in those big gains, and then you don't end up like, let's say you're holding all your shares here, and then you end up selling it here, and then it goes back up again here. Yeah, you made some money, but that didn't feel good at all psychologically, and you want to feel confident and good about your trading. So selling on strength is part of that. In conclusion, buy the stock. Immediately set your sell stop between 5 to 10%. When it goes up 10 to 20%, depending on the market, sell half, unless you are just sure you've got a lion by the tail and are off to the races. And then you can either move that other half up to break even immediately, or you wait until after the first natural reaction. And then the goal is to put the stop just a little bit below the 50-day exponential moving average, and hopefully you get to ride that stock for months, maybe even years. And then ultimately, if you are sitting on a huge gain, you could just sell half when it hits the 50-day and use your judgment. I think that's all I want to tell you about. And BTW, if you are still with me, this is maybe my top pick for next week. Aris Water Solutions. I like that it's a recent IPO. I like that it's not a shipping or energy stock. I love this huge breakout out of this classic double bottom formation. You had this stage 1 IPO base on base, huge breakout. Now look, this is extended. If it goes up again Tuesday, you can't buy it. You're too far from the buy point. But if it can tighten up again and give about half of this back and then start moving up again, then you could jump on it. Look at this nice little handle. Cups aren't the only things that make handles. Double bottoms make handles sometimes too. You got this nice double bottom, then it tightens up, volume falls off, and then whammo. This thing, it's kind of like a trout hitting the line. You fishermen out there know what I'm talking about. All right, I got to get out of here and enjoy Memorial Day weekend. Hope you guys have a great weekend too. Like and subscribe, hit the bell, all that stuff. Take it easy.